Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello subscribers, welcome to the Fast Profits Daily. I am Brijesh Bhatia. Nifty or Sensex is outperforming against the global markets. We have seen since August, Nifty has made a low of around 15,183 July, August, back towards 18,000 levels, and we are just shy of hitting the new all-time high. Probably we are around 4% away. But if I just compare it with the Dow Jones, it's much lower than its all-time high. So yes, if you look at the global markets where we have seen a downward momentum, Nifty opening negative, uh, reverse in the during the day, and shows a positive momentum onto the higher side, and that's the reason I think India is the best investment avenue or investment destination, looking at the global markets, looking at the FII and DIR numbers as well. So let's start with the first chart over here. This is the Sensex to Dow Jones ratio chart. What does this ratio chart indicate? That it compares two instruments against each other and shows an outperformance or underperformance against each other. So here, if you look at the Sensex to Dow Jones, when their prices are going higher, it means that Sensex is outperforming against the Dow Jones, and when it goes lower, it means that Dow Jones is outperforming against the Sensex. Now, if you look at right from 2009, we have seen a consolidation happening after a huge rally into the global markets. 2009 to 2022, nearly 14 years, 13 14 years, we have seen a huge consolidation coming into the structure over here. It means that sometimes Dow Jones is outperforming, sometimes Sensex is outperforming, and then it's neck to neck going on. But back into now in 2022, we have seen a triangle breakout coming up into the structure over here after a consolidation zone. The ratio is trading at all-time high, which means that Sensex is outperforming against the Dow Jones. And if you look at the previous rally up prior to the consolidation, it indicates that there is a resumption going on into this ratio chart, which means that an outperformance of Sensex over the Dow Jones has just began or resume the momentum or resume the journey. And this is the monthly chart, so it is, I'm not looking for a month or two or a 6 months point of view. I'm looking at next 2 to 3 years. I believe Sensex is getting ready to outperform by against the Dow Jones by a huge margin in coming years to go. If you look at the second chart over here, this is Nifty over the S&P 500, and if you look at the structure over here, similar 1991 to 2000 levels, India underperform against the S&P 500, which means that if you look at the prices are falling lower, which means that S&P is outperforming. But in back in 2000, post 2000 millennium to 2008-9, where the recession happened, post 2008-9 subprime issues, during this phase of around 8 9 years, India has outperformed S&P by a huge margin, and look at the rally it has shown. A tremendous outperformance of India over the S&P 500. Again, 2009 to 2021, probably second half of 2021, as Sensex and Dow Jones where chart was there, it was neck to neck performance. Sometimes S&P was outperforming, sometimes Nifty was outperforming. But now back in 2022, look at the breakout happening. The base is there at around 3.2, where the marks are there. Now, if you look at the momentum, the basing has been formed over here. If you look at the third chart over here, after the basing, if you look at the orange line over here, the breakout has happened out of the triangle in structure, which means that Nifty is ready to outperform against the S&P 500. And again, Sensex against the Dow Jones and Nifty against the S&P 500. The reason to take is because Sensex and Dow Jones probably have the same number of stocks compared to the Nifty 50. S&P has a 500 stock, but generally the benchmarks are trading benchmark are nearly same, not the number of stock wise. But looking at the volume, looking at the momentum, generally people follow as a trading S&P 500 or SPX is being followed largely for a trading against the Dow. So similarly, keeping in mind, if you look at the structure, I believe yes, Nifty and Sensex will outperform against the Dow Jones and S&P 500 respectively, looking at the momentum or looking at the structure. And I'm repeating, I'm not looking for a day or two or a few months, but I'm looking for a years to come. If you look at the fourth chart over here, this is Sensex to EEM, which is Emerging Market MSCI Emerging Market Index. And if you look at right from 2008, Sensex is outperforming into the emerging markets. We have currently somewhere around 12-13% of weightage into the emerging market index, the Indian stocks. Look at the momentum right now, and if you are Equity Master member and if we have attended Equity Master conference at the start of the year, I've highlighted this chart that this year will belong to India against the emerging market, and the same chart was highlighted with, I guess, was somewhere trading around 1300 and now trading around 1600. Look at the outperformance of Sensex over the EEM. So it clearly indicates that the funds are flowing into the Indian markets, and Indian markets are outperforming by a huge margin over here. The last final chart is the FII and DI, and if you look at the chart over here, whenever the Nifty forms the bottom, there is a huge selling pressure by FII and the bottoms are formed. Back into, if you look at the 2008, 2016, I guess 6875 was the low. 2020, 7511. Back in 2022, when the recent fall is in, and if you look at the biggest spike of FII selling and the sharp reversal, 15,183 is the recent low. So I believe, looking at the monthly structure, looking at the price structure, and looking at the FII and DI, and if you look at the recent FII and DI, there is a crossover of buying of FII over the DII. So yes, the funds are moving into the Indian markets. So there could be a debate that there was a huge outflow of around 1.4, 1.5 lakh crores worth of flows from the FIIs, and probably I guess 35,000 worth of infusion has been so far after the sell-off. So yes, there is still a room to money to come back to the India, and that's the reason I feel that the outflow which has happened from the FII may come back to the Indian markets, into the equities especially, and we may see the momentum coming up higher and higher on the Indian eye. And looking at the structure, the outperformance of Nifty, Dow Jones, Sensex over Dow Jones, and Nifty over S&P 500 with the funds flowing into the markets, FII coming back, I would not say that they have come back 100%, but yes, this is just a beginning of FII's flow, showing some of the positive number after the selling pressure, which will take India much higher. Again, as I said, most of the companies, even if you look at the FDIs, are now investing into the India, and that's the reason I believe India is a great investment destination, and we may see a next 2 to 3 years the fund flow may increase into the Indian markets, and Indian markets may see the new highs coming soon. Signing off, Brijesh Bhatia.